Hello guys, this is Mariano, the Trading Parrot. Today's price has been quite bullish, I will say. We went for our plan of hitting the level number 2 of liquidity instead of the alternative plan of closing the CME gap. This morning we were talking that was quite difficult to decide because the attractiveness of all this liquidity right next to the price was pretty big, but on the other side, my preference was to go to the CME gap and fill it. In today's video, I want to talk about the potential for the price to come back down in here, the implications of that, levels of support and resistance, starting with this potential global breakout from the level of 59 on the RSI that I'm currently monitoring. So far, it's been a rejection, so I want to talk about that as well with you guys. From today, I'm going to be publishing videos on Coin Bureau trading 3 times a week. I have already published 2 videos, this one in here, and 3 days ago the price explosion. If you want to stay up to date with my trades, primarily on Bitcoin swing trading, I suggest that you both subscribe Coin Bureau Trading and my channel The Trading Parrot. I publish 2 videos a day about what's going on with Bitcoin, covering the 4-hour time frame and above, and this video today is gonna be the continuation of the thesis of closing that CME gap that we published 8 hours ago on the Trading Parrot. Let's go into the content. As you can see, we have this CME gap placed at 66.8 all the way to 66.6. This is right below the support in here. CME gaps tend to attract the liquidity when the Chicago exchange is closed and the price moves in an impulsive way. It leaves gaps in there that are not registered by the market being closed, as opposed to Bitcoin that is always open. And since traders cannot do anything there, there's an accumulation of liquidity that attracts the price back and tends to fill the gap over 95% of the time. We have a few unfilled gaps. One is very recent at 54.5 to 54, but there are some older gaps, like for example this one at 20k that has been creeping up all people all the way to the top, thinking yes, but we still have the CME gap at 20k. Apart from those two, every other gap in all this chart is filled, so that's how effective they are. But as you can see, there are exceptions, in this case 2 out of maybe 100. So the controversial part this morning was, are we gonna go and fill the CME gap first? We were recording the video at this point when this red candle was approaching the CME gap, and it was making us believe that potentially the CME gap was going to be first. At that point, the price was less than 1% away from the CME gap. But instead of that, the price went completely nuts, making an engulfing green candle of 1.69%. And then we understood that the liquidity from 2 in this area of the chart was a lot more attractive for the price. And yes, CME gaps and spot buys are very important for the direction in the long term of the price. But liquidity pools have a lot to say in the short term. They do attract the price a lot. It wasn't the exception in this case. Interestingly, the price made it almost to 68. And regardless of that, it hasn't been able to hit the 68.25. This is a cumulative short liquidation leverage of $500 million. This is $515 million at stake right there at 68k. I will expect that once this guy gets liquidated in here, there should be a bounce to the downside. There's always a reaction when there is a liquidation, and definitely this is the largest level captured by CoinGlass of the past 30 days in terms of liquidations. You can see that any of the other ones reaches around half of what is at stake at 68k. At the same time, at that level, we have some fair value gaps spanning into 68.5 that attracts as well the price. So we have 2 levels there that are attracting the price. But what is the problem at the moment? The problem is that we have resistance right below 68k. Where is that resistance coming from? It comes from this trend line in here on the RSI. And if you don't think that this is playing out, this is the level of RSI 59, which we are tracking in the price, represented by this yellow line in here. And you can see that it has hit the resistance with a difference of 0.05%, just $31. Just unbelievable how these levels play out in terms of becoming significant resistance as well. We have a liquidity hand in here, a big wick to the upside that is pushing the price back below. We have a fair value gap at 67k, but so far this structure in here hasn't been broken. We have a low, a high, a low, a high. Maybe easier to see if we go into the 1 hour time frame, but it's evident the swings of the price in here. They're also evident on the RSI. What are the implications if tonight we go to sleep and tomorrow we see a breakout of the RSI in here? That will be a global breakout, very similar to the global breakdown that we have in here. But the difference is that this didn't last very long below the range. It came back above it and it became just a fake out, a liquidity hand. They were trapping shorts in here, and those shorts have their liquidations in this range. Some of them are still in stress. They probably opened the positions going down and now they have their stop loss or their liquidations located at 2 or maybe at 1. With every time that they trick people, they are making these levels at the top heavier in terms of liquidations from shorts. And we've been for roughly 3 to 5 days repeating like a parrot that what we need to challenge that 70k once again is to form a uniform layer of liquidity that goes from thinner into heavier. At the moment we have a gap in here. It will be ideal that we get all this in green, some of it in yellow, some of it in red. That increases the chances substantially for the price to not have any other alternative to just go there and grab that. At this point in time, we can see that liquidity from longs is going heavier at 64.7. If that was to attract the price, of course, then we will feel the gap that we were talking in here. That is located at 64.7, which is even a lower low, and that will break also this current structure. Notice as well that at the moment on the 4 hour, this move in here on the 1 hour, probably it is an uptrend, but on the 4 hour is not, because we have put a lower low and this level still hasn't made a high. To put a high, we need to go beyond 70k. On the daily time frame, there is a huge battle going on at the moment. I know that many people have subscribed to the idea of the Megaphone pattern. This is the Megaphone pattern. It's a huge bullish flag. Many people have noticed. It's evident that it's calling the attention from most of the Bitcoin traders at the moment. We've been talking about it before it formed. You can watch many of my old videos, and I was already saying every time that we are in here in the market, we form Megaphone pattern. That timing is based on halving events. Either it's after the halving event, during the halving event, or a little bit before the halving event. But here we are, halving event, and we have a Megaphone pattern. So we were kind of thinking, after we do this whole push into 73.5, we should be forming some sort of Megaphone pattern that is gonna last anything from 3 months, 6 months, 9 months, 1 year, who knows. The longest Megaphone pattern at that time in the market was this one in COVID, that of course it took a long time to exit. This is 455 days. So far we have done 231. So don't complain, this is half of the previous one. And it seems that we are getting very close to exit as well. As you can see, I'm placing the top trend line touching all the highs of the price. Some people are placing it touching the closing of the price and are already celebrating, opening champagne and thinking, well, this is the retest. We are already above it. The breakout already happened. I think it looks good. That I'm not gonna criticize this, but I have to say I prefer to use the highs of the price at this point in time, just because of the economic situation, geopolitical and other factors, elections for example, and I wanna rule out a potential fake out, a liquidity hand. And the way I'm trying to do that is pushing the Megaphone to look more challenging, more conservative. And by placing it like this, you can see that we are coming below the range once again. We are doing a test of the previous high in here at 65.6. Last week, this was one of my preferred levels coming from the weekly time frame for a potential move back in the range. I really wanted the price to bounce from that to prove that that previous level of resistance has become strong support, so we can continue battling for a few more weeks inside this area until we can finally claim that it has been broken and we are coming for a retest, and then in a very healthy way, we have all the foundation ready for a push up. Notice as well that the bull market support is doing a bullish cross. This is in progress. We need to wait until Sunday. Of course, if the price remains around this range, we're gonna get it. But if the price came very close, potentially below the bull market support band, that is definitely going to undo that bullish cross. And at the moment, we are in the process of potentially preventing, as a miracle, a MACD bearish cross. These MACD crosses have been pretty annoying. Every time we get one, is pretty much the top of the range in the past 8 months. So if we were able to either prevent the cross or have a cross and very quickly, in a few days after, have some sort of tangling there that opens up in a bullish way very quickly, that will be really great. And as you know, I love to monitor global liquidity, dollar, gold, and what the Fed is doing. There are many more factors that influence or are influenced by the Bitcoin price. There is correlation all over the place with different assets, but these 4 factors are very important to me. And during this week, we are seeing something going on with the gold. We talk about this resistance on the weekly time frame on gold, that so many times we have seen a rejection, either touching it or very close to touching it from below. And this week, after the double bottom formation that we had there, it's been just one candle after other pointing up on the dollar index. Really strong after the breakout from this trend line. And we were hoping that 58 was going to stop the rally on dollar, because that is positive for Bitcoin, for different assets that are valued in dollar. And you can see that the 58 from the RSI was again the perfect rejection there. So far pushing less than 0.5%, but if that was to become the top for gold, for dollar, like it happened 4 years ago, that will really help to continue the next leg up on Bitcoin. Unfortunately, on gold, the story is not the same. We continue to put higher highs, both on the price of gold, but together with the RSI, this is undoing completely the bearish divergence, which is pretty annoying. We're still looking for eventually a breakdown from here. Let's go back to the liquidity and let's see what we have at the moment. We still have here a very low hanging fruit in terms of liquidity. It's not very substantial, so I don't put my hands on fire that we have to take it, but there's a good chance that we do. And one of the reasons is not by judging this green, but just by seeing this liquidation level at 68k, and that could be enough incentive to just go a little bit beyond and take the other ones that are in the proximity. On this move down, I also mentioned this morning, this is a reminder that we went to 65.2 and we didn't take below 65 up until 64.7, which was an area of interest that I mentioned before. There is liquidity in here left over, and actually the liquidity that there is in here at the moment is 12.2 thousand. The one that we took was barely 10.5k. So this is roughly now 20% more than the incentive that was enough to push the price to here. I seriously don't understand why we sometimes there are some leftovers that are so juicy, but they're still untaken. Things start pushing back up. I guess some big orders trigger there as well, not just liquidations. Below this area, we have the 61 to 60k that is quite heavy at the moment. Of course, below 60s is where there is the party of long liquidations all the way to 46k. But comparing all of that against what there is very close to the price, this is really nothing. And we keep monitoring the liquidity at 70k, hoping that it's going to shrink substantially so we can hit it really hard. Yesterday, we were seeing some support in here with 58 million, but now this is gone from the chart. I wonder what happened to that. Possibly it got executed, because I remember it was at 65k and the price came down there. Of course, it touched 65.2. I guess it got executed and that was what pushed the price higher. What is good is that we have reduced the 97 million and right now is 84 million. Yesterday we talked about this alpha related to longs versus shorts delta starting from August, and you can see that each and every time that Bitcoin dumps, the shorts get extremely excited. The amount of shorts relative to longs spikes, but as we are approaching now the breakout from 70k, each and every time that we crash less. And you can see that's evident in this line in here. And the same goes a little bit with the longs. Every time that we are pushing to a top, we're getting a little bit higher and the longs are getting more confident to what they're doing. Here is a little bit of an exception. You can see it's slightly below the amount of longs that there was in here, according to this particular trend. But we talked about this yesterday. This is a new alpha that I spot a couple of days ago, this particular channel, and I mentioned it as a potential for this to be the reversal. I even left that they align in here. Potentially we could be doing something like this, and pretty much that's what we did. Interestingly, there's still a lot of shorts even though we are now almost at 68k. So I'm gonna have to pay a visit to the delta and see if they're still here, because typically once the price goes up, is the longs the ones that are exposed. Let's give it a refresh, and as you can see, even though we have moved up, the delta is still putting the shorts at higher risk. This is a positive thing for a long, for a move up, for continuation. It doesn't need to be respected all the time, but it's good to have another checkbox pointing up. I remind you that the CME gap is a counter checkbox. We know we have that and it's gonna bug us. That's why I prefer that we just go. Let's close the CME gap. They have such a high rate of being filled that moving up into 70k, breaking out, leaving that gap together with the one at 54 is not something I am going to enjoy a lot. And this is very decisive time, guys, because we have the megaphone pattern and now we are battling it, the line that I prefer from below. If you look at the big detail in here, you can see that we went down, we have a bullish reaction up, sure, but I wish that that reaction continued above the trend line. Closing the day like this, it looks to me like a rejection to exit from the megaphone pattern from the top. And if that's the case, maybe we have a chance that we go and we close very quickly that CME gap. Hopefully not the one below. Guys, if you want to trade Bitcoin altcoins, have a look at the description. I have 3 exchanges at the moment that are offering pretty juicy bonuses and the largest discounts that you can get with them, pretty much. Bluefin, Bybit, and OKX. The links are in the description. Remember, tomorrow's continuation of the story is going to be in the Trading Parrot. Next week, I'll put out another video on Coin Bureau trading, probably on Monday evening UK time. I'll see you then. Bye bye.